Today I want to talk about Macquarie Group. It's a stock that has been going up strongly over the past 1 to 2 years, and I believe it still has a lot more to run. Here are some reasons why I think so. Macquarie Group Limited is probably better well known as Macquarie Bank, an investment bank established in 1971. Investment banks are different from regular banks in that it doesn't have a large network of branches that customers use for their banking needs. Macquarie Group deals in investment fund management and corporate activities. Such activities include company mergers and acquisitions, floating new companies on the ASX through IPOs or initial public offerings, and lastly, capital raisings through share issues. Here's a 10-year chart of Macquarie Group's stock price. In 2007, after a 4-year bull market, it rose to about $95. In 2009, in the depths of the global financial crisis, the stock, like many other financial services companies, fell dramatically. It bottomed out at just a little over $15. 5 years on, the stock is at about $60 now, returning to price levels last seen in 2008. Since 2012, the world economy is rebounding. International and domestic financial markets are improving from the global financial crisis. The U.S. is in the 5-year bull market and still climbing. The ASX did have a downturn during 2009 to 2011, but since then it has been hitting multi-year highs. Lastly, Asia is growing. China is changing into a consumer-driven economy, which is great news for the ASX and its companies. Here are some reasons why Macquarie Group is growing its business and earnings. Number 1, corporate activity is rising. The number of mergers and takeovers has been rising in areas like energy, food production, retail, and financial services. Private corporations want to capitalize on this increased investing demand, so more companies are being listed through IPOs, a sign in financial markets that the bull market is picking up speed. Macquarie also generates fees from growing amounts of investment funds and directly gains from rising customer returns. Macquarie Group is growing its residential home loan volumes to take advantage of the rising housing market. It's increasing its market share of the loan market, which is currently dominated by the Big Four banks like Commonwealth Bank of Australia and ANZ. The bank doesn't have a local branch system like regular depositor banks. Working with mortgage broking and financial service companies like Yellow Brick Road, it can reach more borrowers through its strategic partners' branch network. Macquarie Group can still expand from here. Earnings are forecast to grow further from a stronger domestic economy and overseas investments.